Hello and welcome. This is Steve with Letsplan.com. I'm asked regularly when I'm first showing and demonstrating Letsplan to loan officers, they would ask, well, what's the point of Letsplan? What does it do? And what makes it unique? And I would say it's simple, helps you translate banking very quickly to a customer. It's very pleasing on the eyes of the customer. And it also gives the customer what they're asking for. They want answers. They would love for someone who's an expert, you, the loan officer, to help them understand what their payment might be, what they can afford, to help basically guide them through these steps of what home buying looks like. Even if they're a move-up buyer, there is so much that goes on in banking, and customers just don't have access to current interest rates, the knowledge of what's changed in the market, what loan programs exist. There are just hundreds and hundreds of programs and thousands of variations of programs for customers. So pretty much they're flying blind and they need your help. Now, Letsplan was designed from an initial meeting I had with a customer where I realized this need, and the need is they needed good advice. And I found that in banking, I call it Are You Worthy Banking, that most banking required me to go get do application, get my credit pulled, and then they would tell me what I could afford. But it was one-sided. They were telling me whether I was worthy. That's why I call it Are You Worthy Banking. They didn't explain things. I wasn't instructed on anything. There wasn't an investigation or a inquiry, questions asked of me about, well, why are you buying this home? What's it used for? What are you going to do? What stage of life are you in? So I want to demonstrate things that you might say to a customer and share with you the logic of Letsplan. So here we have Letsplan. I'm going to start a meeting. And whether you're meeting with a customer in person, face-to-face, whether you've pre-prepared a Letsplan and now you're showing these copies of a piece of paper or maybe a PDF to your customer because you prepared it, or you're doing it live with the built-in Letsplan system where the customer from a web browser can see what you're doing when you let them into your room. But here we have a cover page, and the cover page is designed to just introduce each other and set the framework. You know, what are the ground rules of this meeting? What I tell every customer is they're the boss. They make all decisions. I don't make any. Where that makes me the treasurer. I'm responsible for putting the numbers together, providing options for the customer, and I would even boldly tell them, I'm here to earn your business. How many people say that to a customer? I want to earn your business. I want to be a trusted advisor for you. Let me be that person, but first let me prove it to you. So here we have the cover page, and I usually will fill in the customer's first name, last name, find out who else might be in the mortgage. Are they married? Put that information in. I'd put in their address in each one of these sections because this does feed the CSV that you can download and give to your CRM. In fact, Letsplan is partnering now with other CRMs out there so that when you finish a meeting, you have the ability to send this data to your CRM to where they receive it and then now create a new customer for you automatically in the CRM. Cover page, though, is important. You've laid the ground rules, and I let them know they make all decisions. I don't make any. My job is to provide options and to listen. Now, there are two other main pages, three specifically, but two that are really a key. The monthly income page. This is very important. You can do these in any order you want because you are the boss of your own business. You're the person running your business. But I'll share with you what I do and the reason there's psychology to this. If you start off with a customer and ask them about them, you have what I call the monthly income page or mortgage wallet page. There's the word mortgage wallet. And what that means is how much money does this person have every month to make a payment towards their mortgage? That's the mortgage wallet page. We're going to identify that number using bank math. We're going to use certain debt-to-income ratios here. So in an example of a borrower who makes $100,000 and maybe makes a bonus of $20,000 a year, they're earning $120,000 of gross pay. Well, why gross pay? Why annual income? Why not monthly income? Because I found over the years of doing this that customers remember their gross pay. But if I ask them, what do you make monthly, they will tell me their take home. It's what we remember. What's my check look like? What's showing up in my bank account? And now we're trying to back into what their actual pay is. But if someone is salary, well, that's easy. What's your annual pay? Put it up here. If it's hourly, take the hourly rate times the hours, 40, 52 weeks a year, put that pay in there. You're narrowing in. If you actually have pay stubs, you can actually do the calculation yourself. But the idea is to start at the 10,000 foot level with the customer first. You're not an are you worthy banker. You're someone who's saying, let's both stand at the 10,000 foot level. Let's just see what direction we can go. Are we going north, west, south, east? Which direction do you want to go? So we're going to help the customer, and we're going to start with their annual income. I call this the proud. What is your identity? Your identity is your job. What do you do for a living? You put all that detail in here. You can, of course, edit here and put in their name and their occupation, all this stuff, and I would recommend that you do that. Now that we've arrived at total pay, it now divides it monthly because now we're using bank math. We're going to stay in the monthly realm. Here we are at $10,000 a month, and I'm going to use, I call it a rule of thumb. 45% of their monthly gross is a rule of thumb that bankers would use to say, hey, let's spend 45% of your gross pay monthly towards car payments, minimum payments, credit cards, student loans, etc., and we'll arrive at the mortgage wallet number. What can you afford towards a mortgage? What's left over for that? So let's say we have a car payment of $550 and credit card payments of $100, no student loans, no motorcycle boats. It's a very clean file. There we go. Hey, customer, you can afford a $3,850 mortgage payment. In fact, that's just using the rule of thumb. If this is a conventional conforming loan, we can go to 50% based on current rules, which means you could afford a $4,350 payment. Now, what you're going to find when you do this is, I mentioned this was the proud. This is my identity, right? What is my job? But this is what I call the pain. Debt is pain. Debt is fear. I have a car payment. I have a credit card payment. Maybe I have student loans. Maybe I have a lot of credit card payments. Maybe I have a lot of toys and fun things. I want to live. I want to experience life. Maybe I have other expenses. You can always add more, of course, here. Maybe I owe money to a government agency or local agency, to family, whatever that might be. That's the pain. And I will tell you that statistically, 62% of all potential home buyers, out of every 100, 62% will not move forward with a mortgage because they're fearful of the pain, that they will be rejected, that they're not capable of purchasing something because they're not aware of this calculation. They don't know bank math. But if you were to meet with a customer before they make application and bring them to this point and explain how this is bank math, you will find they will be shocked, they will be surprised, they will be relieved. But this is where I believe in our industry, in the banking mortgage industry, that we are failing our customers by not meeting with them in advance and walking through the pain part of what people are most afraid of, that thing they think will keep them from buying a home so they don't even go looking. But if you meet with them, you'll find that 62% more people will make application with you versus the are you worthy, go make application and then I'll talk with you. So you will see your ratios move up quite fast. I was averaging 84% capture ratio. That was the 22% if I asked them just to do application, but the extra 62 who weren't sure whether they could afford or if it was going to be out of their range or what it even meant. Well, they were the ones that also moved forward with me, and so 84% capture ratio versus a close ratio, which you would also find to be around 88%. So here we have everything factored out for this customer. We've asked them, hey, here's your $3,850, and they would usually say, oh, I don't want to spend that much. And I'd say, well, what's your credit score? They might say 760. I would ask, what's your current rent, or are you renting? I'm renting right now. What are you paying for rent? I'm paying about $2,000. Okay. Now I'm bookending this. I see that you're paying $2,000 a month, but I see that you can afford $3,800, possibly more if I move that number higher. But so since you said not $3,850, customer, what would be the number that you'd be interested in? And they might say, I'd be okay with like $28,000, maybe $3,000. Okay, we have a starting point. Very good. Now let me know, do you have any bankruptcies in your past? I could type no. Are you a U.S. citizen, a permanent resident alien? I would type that in here. But what's really crucial is, do you have any money set aside for buying a home? And this customer might say, well, I have $80K in savings. Awesome. That's good to know. So you've got $80K in savings. Any other money? No gifts or anything. You type it all here. And I would ask the customer, does this page make sense? And usually they will say, 99% of the time, actually it does. This makes sense. There's nothing else in here. No, this is it. It's that easy. Banking is not hard. The difficult part I have is knowing all my loan programs and which ones am I going to present to fit your needs. Now, this is where I'm asking them, well, what do you want to buy? What stage of life are you in? Are you married? Are you single parent? Are you empty nester now? Are you retiring? My philosophy is the only home I want you to own is the last home you buy. I would love for you to pay cash for the last home you buy and have money left over for taxes, food, and fun. That's called retirement. It could happen at any age if you get to that stage and this is where how you want to live your life. But between now and then, I'm planning for every home between now and the time that you pay cash for the last home you buy. I want to be your trusted advisor. I want to earn your business. Now, the customer might say, that's great. No, this page makes sense. Let's move forward. And I'd say, great, let's go buy a house on paper. Let me put in your contact information, your telephone number, and let's go to the loan scenarios because I'm going to send them every page that's existing here. I'd let them know every page you're seeing you're going to get. All right, so my marching orders are a $3,000 a month payment and $80,000 in savings. So I'll go to my loan scenarios page and I tell them that it's made up of 3 parts. How much home are we buying? What's our monthly payment going to be? This will be where we get to $3,000 a month. And then at the very bottom will be these fees and costs that attach to the home. These are called closing costs. These will be the prepaids. They'll be totaled here. And then this cash at closing number is the down payment that we'll come up with and the closing costs combined. So all money will be accounted for. And we won't let that number go above $80,000. So here's your payment. Here's your total cash. Please focus on those 2 numbers. Interest rates today are 6.5%. I'm going to assume, let's put 5% down. I'll put in a purchase price and let's watch to see what gets us to $3,000. Oh, and yeah, let's try it. Let's go to $400,000. There we are, not too far off. Here's a $400,000 home with $20,000 down. Our mortgage payment, $2,402. We've got taxes, insurance, mortgage insurance. All parts are here. We're looking at a $2,900, $29 and $14 payment. Closing costs prepaids equal $9,730. These are being fed, by the way, from this page here. Automatically did it, and you control these fees from your managed fees section. And we're spending $29,730. We still have a lot of money to go out of 80. Now I'm going to move up. I'm going to go to 10% down. Now we're at 40, so we've really minimized this, but this gives us a chance to get closer to 80 and spend more money, but relieve the customer of too much payment. So let's go to 450. There it is. Okay, so we've exceeded the $3,000 a month. We can downplay this a little bit to 440. There we are, maybe 435. There we go. Here's a $435,000 home. So customer, if you want to spend $3,000 a month, you would buy a $435,000 home. You would put 10% down. Taxes, insurance, all the parts are here to make up this payment, and your closing cost prepaids, $10,000 roughly. So you'd need $53,519. So you've saved some money. You don't have to spend all $80,000 if you don't want to. If you can't find a home that you like at $435,000, it sounds like we have probably another maybe $20,000 or so to go. So you might be able to get up to the 450s, and we'll increase your down payment to make up that difference to keep you around $3,000 a month. So here's an example of a customer who has explained to me their income. We walked through the pain of debt, and they saw what they could afford per month. They made a great decision on how much they want to spend, but at least now they have a sense of what they could afford and whether they would like to move forward. At this point, I would ask the customer, would you like to move forward? Can I send you all copies of this with a link to do application? And they will typically almost always say, yes, that would be awesome. I would like to try it. Let's get this ball rolling. I'll take a look at our fees. If you want to go through the fees, if they do, I'll go through each one explaining what they are. But at the very end, I'll get to the customer information page, and I'll say, first time buyer as their name. And let's go and end the meeting. It always puts in their name here, whatever I typed in that section. I see that all 4 pages are checked. That means they'll turn into a PDF. I'll end the meeting. And now the first time buyer, there it is. I want to print it to send to the customer, so I'm going to go over here to the PDF. It'll create a new tab as it makes the PDF file for me. There's all the data that we put together, including the loan scenarios page. And now we have a record of that meeting. I'm going to download that to my folder where I want to leads folder, for example, wherever you save them, and then I'm going to email that to the customer so that they have a copy with a link to do application. And that right there is an example of a first meeting with the first customer, how easy it is with Letsplan, the psychology that goes into it. There's even more, but I wanted to share at least a brief moment so that you could see, well, how can it be done and what's its value? So I think its value speaks for itself in that it does for the customer what they need. Letsplan was designed for borrowers because borrowers need easy translation. They need you to be their advisor, the person they go to, their banker, and the way to earn that is to serve in that role. Thank you. Have a great day.